We already talked about my warning, right? That this looked that like the dollar was going to weaken, and it did obviously gap down. It did gap down right here, and then it broke a very, very key weekly level of 105.77 I've been very, very focused on. And then it just bounced into resistance, and then it rolled over some more. So this is really, really the reason for the season.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and timeframes like chase, swing, and trend. Get the trade before it happens. Sign up to Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.laductrading.com/club.
This is the Mag 7, right? This is where we're at. We broke out. So I had Tiffany post this in the swing channel saying break hard, bounce hard or trounce hard, right? It was right on this candle. And obviously, you know what happened. There's 2.5 weeks. That's it. 2 weeks and 2 days. We haven't quite taken out the prior craziness from October, but we have taken out the July highs, right? And I'm not just talking Qs, 390, all that. I'm talking about this ratio of all the Mag 7. So at the time, I kind of find this interesting. This dropped. Dixie was like 107.69 or something, almost 108. And we fell very quickly in that 2-week period, by the way, down to 104 in the dollar. And the 10-year fell from 5%, literally 4.99, down to 4.5% in 2 weeks. This is a massive, massive move. This is, again, an outlier. So this is the result, big, mega cap tech concentration, and they're still talking about it, and they're still positioning for it as shown in every metric, right? And every article, Bloomberg article, etc. Everyone's going, hey, there's safety right there. Get out of cash. You can go get more than 5% by crowding into mega cap tech. That's what's going on right now. Very hard to short. And so that's why I wanted to bring up that kind of thesis where, all right, when I'm talking about something getting tired right now, it is on a short duration. I need to see some real true rollover and follow through. But big picture, this is fighting the current that is 1999-esque. And if the dollar continues to fade and the yields continue to do their thing, right, of falling into that kind of 10-year from 5 to 4.5 to 4.1, then it will be very much the reason why stocks move higher. Everything else can be ignored as far as reasons. But anyway, for right now, I really think that this is the gist of it. And I hopefully put together some thoughts that make a little bit of sense, but you have to read it and let me know. Anyway, the point is, it looks mighty convincing to me anyway, that we need a little bit of a bounce in dollar and yields to get this melt up to fade. Okay, but big picture, that Dixie short and that softening of yields is still the reason why stocks and bonds are bullish. Anyway, the point is, we have a melt up clearly in progress. It's damn hard to position short. It's damn hard to stay short. And the reason for the season is falling dollar and yields. And the reason for that falling dollar and yields is intervention. So you've got monetary liquidity and you've got inflation softening because of monetary liquidity. And there's just nothing else to say about that until we get a macro trigger for a solid swing short and or trend short. This is still, I know it's hard to believe, a bear market bounce. But if we continue to have this dollar and yield regime softening, I can see a 1990 type of redux where they're just the only game in town is big money is chasing the big money. So careful shorting. What to short? I mean, ARK is up 23% in 2.5 weeks. Home builders, yes, up 17%. Semis up 16%. Small Not regional banks, KRE is up 13%. All right, small caps, you name it. The Q's up 10%, etc. Jets, by the way, that, okay, nice bounce there. On fading oil. And oil, by the way, let's go over all those real quick. Has not been moving higher despite a falling dollar. That was kind of a, surprise. Yeah, we're going to go over some earnings too. I know. Anyway, long story short, take a look. Trends are fine. Chases, obviously, we can control. Swings right now need to kind of get this backdrop stabilized. We had a massive rally of 2 weeks and 2 days. I think it peters out now into next week. Let's see what happens. Maybe even the next month. I think that would be really, really good. Anyway, I've written out some bigger picture thoughts, but the market's going to open. So I just really want you to read that section. And here's why, because I think this falling US dollar is so bullish. It's bearish, big picture. And I have, this has to be teased out and tested over the next few months and into next year. But I'm actually really kind of getting focused on this theme that a falling dollar is going to be a big head fake for stock bulls.
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.